Welcome to the daily insights that matter. Now, non-performing assets, or NPAs as they are commonly known, have long been a concerning issue plaguing the Indian banking system. However, there have been notable improvements in the bank asset quality over the years. Now, in the recently released biannual financial stability report by the Reserve Bank of India, it was revealed that the gross non-performing assets ratio for Indian banks continued its downward trend, reaching a 10-year low of 3.9% as of March 2023. Now, furthermore, the RBI predicted that the gross NPAs are expected to improve further to 3.6% in the base case scenario. Now, if you take a look at the chart displayed on your screen right now, it illustrates how the asset quality of Indian banks began to deteriorate in the early part of the last decade. Now, the situation reached its peak in March 2018 when the gross NPAs accounted for 11.5% of the gross advances. However, since then, there has been a consistent and steady improvement in the bank asset quality. If you see this sectoral chart, sectors such as agriculture, industry, services, personal loans have also seen a decline in their GNPA ratio. Now, we see that the bank asset quality is steadily improving. The recent rally in the market can be largely attributed to this improving asset quality. India's banking system has remained stable. Factors such as robust earnings, adequate capital, liquidity buffers, and improving asset quality have collectively positioned Indian banks well to sustain the upturn in the credit cycle that has been underway since early 2022. However, amid events like some of the banks which are facing severe stress or even going down globally, our central bank governor underlined the need to be watchful and added that the financial sector regulators and regulated entities in India are committed towards stability. Now, in the first quarter of 2023, the United States GDP, or the gross domestic product, experienced an increase at an annual rate of 2% as indicated by the third estimate. Now, this figure represented a positive adjustment of 0.7% point from the second estimate, primarily due to the upward revisions in exports and consumer spendings. Now, to provide some context, it's worth noting that the real GDP had also increased by 2.6% in the fourth quarter of 2022. Now, the growth in real GDP during the first quarter can be attributed to several factors. One notable contributing factor was the increase in consumer spending, which indicates the individuals are spending more on goods and services. Additionally, there was a rise in exports, meaning that the US was selling more goods and services to other countries. State and local government spending as well as federal government spending also witnessed an increase, reflecting higher levels of expenditure at these levels. Furthermore, non-residential fixed investment, which includes spending on structures and equipment by businesses, showed growth as well. However, it's important to note that this growth was partially offset by the decline in two areas, specifically private inventory investment, which represents the change in the value of goods held in inventories by businesses, which experienced a decrease. Additionally, residential fixed investment, which refers to the spending on housing construction and renovations, also saw a decline. Now, although some sectors are growing and consumer spending is strong, there are concerns about whether this growth can continue in the long term. Looking ahead, the short-term outlook for the economy remains uncertain. The Fed has implemented multiple interest rate hikes to curb inflation. Now, the US economy is facing risks due to tighter monetary policy and challenges in the global economy, which could impact the future GDP growth. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com